All right, I should be live on YouTube. Good afternoon, everybody. Derrick is off to get his booster shot, so I'll be doing the meeting today. Uh, Myself, Patrick, is an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your financial conditions. Position disclosure: at the time of this recording, I'm long Dropbox, MGI, WeWork, and INSG. And that's all I gotta do for that. Okay. FDX, FedEx, really nice move here after earnings, after hours. That's a really big buyback. I don't know what that is in terms of like the float or anything like that, but 5 billion is definitely not a small number, and it looks like just the actual earnings themselves, their earnings and their guidance look pretty solid too. So nice move for FDX. I don't know if Rivian is out yet. It doesn't look like it's out. I see it's trading. Actually, it might be coming out right now. Let me just see if Rivian Automotive. It looks like Rivian's out, but I mean they don't really have earnings to report in the first place, so they're kind of just talking about um, like facilities they're gonna build and stuff like that. So I don't know, nothing much there for Rivian. Okay, so let's talk about the market for today. So obviously, kind of a crazy day. People on YouTube don't know, but I was out the last week or so I missed a week of what looked like a lot of volatility and somewhat difficult trading for sure. And it looks like it's not getting any easier. So I do know that yesterday was the Fed day. And basically, as far as I understand it, correct me if I'm wrong, but the Fed said what we're gonna increase the taper, so going from 15 billion to 30 billion a month, and then 3 rate hikes per year, so 3 rate hikes next year, and then 3 rate hikes for 2023. So the action definitely can be a little bit confusing here. It seems like, and I said this last Fed day too, it seems like almost every single Fed day that I can remember for kind of a while now, we trade up on it. And then I don't know if it's because, like, I don't know, the reason I come up with it in my head is people get super scared of a doomsday meeting every single time, and everyone way over hedges themselves for the Fed. And then when it's not some type of doomsday meeting, they gotta, unwind those hedges, and we trade up. I don't know, we've been trading up on the Fed days a lot recently, but today sends a bit more of a, maybe it does, maybe it doesn't, but it kind of seems like it sends a bit more of a clear picture on what the money's actually doing in response to the Fed. I don't think all of the money that moved due to the Fed meeting moved yesterday afternoon, right? Because otherwise today really shouldn't have happened based on the candle from yesterday, based on yesterday's action. So I mean, I'm still getting a little bit caught up with the market and with the news and everything that I've missed, but today is definitely an ugly day. We really, we were trying to hold 470. I remember throughout this morning we were holding 470, and then we kind of just broke down and lost it. And we really shouldn't have gotten much more below, like kind of halfway of yesterday's candle. You got your daily 80 May here at 466. We broke that today, bounced off the 21 day, but a really ugly close. And I was saying this morning too, I can't remember the last time if I've ever seen the S&P at all-time highs, which this morning the S&P was at all-time highs, with the Nasdaq, the IWM, and the Dow not at all-time highs. There's been plenty of times where the S&P has been at all-time highs, and obviously the Russell hasn't been at all-time highs because it basically never is. And the Nasdaq wasn't at all-time highs, and people are like, "Oh, Nasdaq's not at all-time highs, but the S&P is. What's going on?" And that's because the Dow is leading. But the Dow is not at all-time highs. It's only the S&P. So I thought that was a little, I don't know. Not that that means anything per se, but I just can't. I remember looking at that this morning, seeing that the S&P was at all-time highs pre-market pretty much, and thinking that that was a little weird. But that being said, I mean, today's action was definitely ugly. We saw put flow across the board. The most notable flow that I remember were these giant IWM put sweeps that came in for January 203s. And it's significant. It's significant for many reasons. One, just the size behind the orders was pretty big. Two, they're going out with a little bit of time. January 203s. 203, we haven't been to 203 since literally last January, basically a year ago, right? 210, kind of like 207 to 210, really 210 has been a massive, massive support level for this gigantic range that we've been in for, again, basically a year. We looked to try to break out of it, failed, and then when we failed this 235, I remember talking about coming back here, failing this 235. Okay, we broke out great after such a long consolidation. Then we're coming back down. Okay, we're retesting 235. That's okay, but we really, once we failed that 235, we were down pretty hard. So now that they're coming in like those 203 strike puts, is there news on X, or are you just asking for the name? X is down, ticking a little bit. Their earnings are out. Or maybe they're just providing guidance. But it looks like they just updated guidance to lower it on the U.S. Steel. But anyway, so just the fact, if IWM sees 203, again, that's a bet on breaking really, really big support here. And it's interesting, a lot of people are really confused at this market. I would say basically everyone is, as to, what's going to happen with the Fed and how money responds to the interest rates going up and everything like that. Because we have all these names that are in all these bear markets, right? Like, I could just sit here and type up tickers for hours that are in downtrends and have been in downtrends for months. Whereas like SPY, and we know, certain names like Apple have been helping and holding the market up a lot. But like these indices have been holding up really well. And IWM is to the point here where it's like, okay, this support has held so well for so long. It's such a big support level. But then now that we failed this weekly breakout, I mean, despite a lot of these names that have come down and have been getting beaten up for so long, like the IWM really shouldn't be here at all in the first place. It looks like those 203 puts honestly like might be a good bet. You hate to see it, you hate to say it, but IWM, like it's hard to say, is IWM going to hold here for the 1, 2, 3, 4, 5, like 6th, 7th, 8th time, 9th, 10th time, holding this support. And that would make sense with, again, like SPY is at all-time highs. We had, was this barely a 5% correction? I think this was like the first 5% correction in however long, but we haven't had the 10% correction that people keep calling for over and over again. And there's like no way that if SPY gets a 10% correction and the NASDAQ probably goes down like 15% in that 10% correction, there is like probably no way that the IWM is just going to hold up. There's just like no way. So this might be, like an early warning sign that the market is going to kind of actually break down further. I mean, today was really ugly. So, I know I'm kind of just going off on like a little bit of a tangent here. I'm kind of just like thinking out loud. But, this IWM failed this weekly breakout. Now it's back down to these big support levels, and it's testing support for the whatever 10th time, looking really, really ugly with the market at all-time highs, but putting in a really bearish candle with, pretty poor action across the board. So again, it's, I'm not here to predict the future, but things don't look so great after today. And again, just there's no way that this IWM is holding up if this market actually kind of breaks down at all. I mean, the IWM looks like this, and this is like one red day for SPY. And then the Q candle today is even worse, right? Like this is as, pretty much as bad as you could get for today. I mean, I know we didn't break yesterday's lows, but besides that, we're closing below yesterday's open. I mean, that's really, really ugly action. Closing below the moving averages. These moving averages are sloping down. So things look lower to me going forward. Unless something changes and reverses today's candle or something like that, but it's really hard to see it, to try and like predict that like the IWM needs to hold up, and it's just hard to predict that happening with the SPY has been marching higher and higher and higher for so long. We haven't gotten that 10% correction that people have been calling for over and over again for forever. So I don't know. That's all I really have to say for today, because again, I'm still kind of catching up on everything and all the action that happened over the past week or so. But I think basically everyone was caught for a loop, thrown for a loop, was surprised by today's action, definitely including myself. I was saying midday today, I was like trying to go back and look at some of like the morning news I posted to just try and like, read anything I missed or catch up on the news or something like that. And like usually I post like the overnight summary and the morning reading summary that I get, and like the first sentence of the overnight summary was global equity markets are flying higher. Like everything looked great this morning. So, I think if you were caught off guard today, I think pretty much everyone was. And it's ugly action. It is what it is. You can't sit here, like if the action changes day to day, you can't sit here and say the market's wrong, this is stupid, because the market's never wrong. You just have to adjust to it. So everything looked great today. I mean, everything looked great yesterday. Now they reversed it. Everything looks pretty bad today. It is what it is. Is this going to turn into a downtrend or just kind of sideways chop? I don't know. If it's going to be sideways chop, the IWM really needs to bottom like here and now, and make its way. You got a potential double bottom here, I guess. Like kind of a potential W, but you need IWM to go back up to 225. So if we're gonna chop in range, this IWM really needs to kind of find a floor here. But otherwise, it is what it is. The market action is telling us, is warning us. So that's all I really have to say. So if you guys have any questions, comments, thoughts, complaints, feel free to post them now. And then I'll scroll back up and take a look here. So I guess first I see Christian. This morning I was watching F, but didn't buy it until we got the bounce in the indices at 9:45. I thought that might be it, and placed a stop order to buy F at the break of the high day. That made me late again, didn't it? Should I have bought at the break of the 940 candle, even though it was not a real inside 5? Well, this 940 candle is not an inside 5, but this one is. I'm surprised you're not even mentioning this candle. This 935 candle is an inside 5, which technically, I mean, it looks like it would have been a kind of a, not painful trade per se, but it broke the high and then came all the way back down, but technically didn't break the low. So if you took this trade, you shouldn't have gotten stopped out, and then probably gave you enough to cover your risk here. That being said, I'm definitely not a fan of buying this high 2090s when at the time your 80 MA is a little bit far away for that. I mean, I know it's kind of catching up at that point, but yeah, if I were you, one, I would try to notice this inside 5, and two, just based on like your type of trade, if it's going to work, it should kind of just like, your 80 MA catches up and you push higher. It shouldn't break above these candles highs and then come in with a bearish engulfing candle. And if it does, then you get stopped out, and it's probably good that you get stopped out, because if it comes in with a bearish engulfing candle there, it's probably going lower. But so yeah, if I would probably, again, take this inside 5, or even if this isn't a real inside 5, it's kind of telling that you come up, you sell back down, and then right at, you sell here, you sell back down, and then immediately after you sell back down, it gets bought right back up. That's kind of telling when, you run to sellers, but then they just get negated right away. So yeah, I would have probably taken that 940 candle, if that makes sense. Not that I don't hate your buy at day high, it's just if you can find a better buy with tighter risk that still, somewhat makes sense, then, why not? Yeah, Rivian reported, Josh, but I didn't really see numbers. It was just like kind of headlines about production and stuff. If IWM breaks below 210, then look out below. Word on Main Street is that the bears are not going to hibernate this winter. Yeah, for sure. Back here with the 200-day caught up, I like these 210 buys, but now, this doesn't look good. I guess I hope I'm wrong. I'm long stocks. I'm not short anything. But it doesn't look good. For sure. Does not look good. It's a huge, huge support level, so it wouldn't surprise me if it does bottom a bit. And again, you do have somewhat of a potential double bottom here. But yeah, it doesn't look good. It shouldn't be back down here. Is it possible that we were fooled yesterday into thinking all was good? Maybe we just have a situation where the institutions are in de-risk mode, and that is really a big story. Yeah, there's so many, I guess, topics or themes that people talk about with the end of the year, because then you also got, tax loss selling, mumbo jumbo that everyone talks about, which usually they say that's over by, the 15th or this week. Tomorrow, Friday, is also options expiration, and I believe it's a quarterly witching as well. Quad witching is tomorrow, I'm pretty sure. So it's also not unusual that we see weakness into the options expiration. They front run the selling, and then we kind of bottom out after there. So typically this is where basically after this week is where we would see these small caps bottom out, if not this week, after this week, based on seasonality and things like that, tax loss selling, basically December 15th to January 15th. So, it's a good, if we're going to get that bounce, it's a good spot. Yeah. So let me just reread your question again. Maybe we just have a situation. Yeah, so I don't think we were fooled, Steve. It is what it is, really. Like I said, it seems like we always bounce on Fed days itself, not as long as I can remember. But for the past year or so, I can't really remember a time where we really got shaken down from the Fed meetings. It seems like we always pop. And I kind of think it's because people overhedge themselves going into the meeting, expecting Powell to, drop the bomb. And he's gotten a lot better at talking over the years, and kind of not scaring the markets really. So people overhedge, and then they have to unwind those hedges, and then that kind of further squeezes things. But today seemed like, kind of real orderly selling. So, we'll see after this week, after quad witching options expiration, into the second half of December, which is typically where we get the Santa rally. Typically, again, tax loss selling is done after this week. So, we'll see. Markets definitely seem to be at a interesting, inflection point, if you will. H pattern 2 on IWM. Well, yeah, basically like a failed double bottom is an H pattern in a way. Yeah, for sure. For sure. Really ugly. From that weekly failed breakout, which when a breakout failure, or like a failed pattern is a fast pattern, something like that. I forget the saying. But yeah. Can you share your plan regarding trading for cash flow around a position? I find when I hit a trade, I hesitate to offer out, worried that I miss bigger move. Do you use EMAs on a small time frame as a guide, or just like every 10 to 20 cents depending on the name? I gotta reread that. Can you share your plan regarding trading for cash flow? I find when I hit a trade, I hesitate to offer out, worried that I miss bigger move. I mean, it's hard to give a direct answer, Jerry, but I would just say, like, follow, I mean, not to give you, like, a stupid answer, but follow your game plan, which your game plans obviously need to have stop losses, but you should have targets as well. I don't think necessarily you need, it depends what type of trade you're taking. Are you taking, like, a big swing trade where you really like the stock and want to hold it? Then maybe for half your position you have one target, and then for another 25% you have another target, and then for the last quarter your target is, I don't know, the moon, and you just try and like trail it based on the daily or the weekly chart, right? Otherwise, maybe you're just going for like a bounce trade, and you have a target of the 5-minute ADMA, and then you have a target of the 15-minute ADMA, and then hopefully you're taking like that trade in a good spot, so you're extended on the daily, and then you have like a ultimate target. I like to call it like your ultimate target for your last 10% or your last 25% would be whatever the daily ADMA or something like that. But then, so your actual question about trading for cash flow around a position, that just kind of goes with like the way I know like Derrick kind of does it, and I'll do it sometimes myself. Although I try to do it a little bit more discretionary just based on the chart, but he'll just trade like every 25 cents or something like that. So if you're buying a stock and your out is $15 and you're buying it at $16, what's your profit target? I would hope your profit target's at least like $20, $25, right? If you're risking $1, hopefully you're going for more than $1 move. So if your stop is 15 and you're buying it at 16, you can still, what if it just trades around in the 15, 16s for like a couple days or a couple weeks or whatever. You can just kind of like, I think Derrick does it a little bit more mechanically, just every 25 cents or something like that. Or if you're able to kind of sit and watch the chart throughout the day, buy when it's red and when it's weak. Because you're not just randomly buying it, you still have a game plan in place, you still have an out in place. But so follow, I hope that makes sense. Just like follow your game plan and you should have target profits for stuff. Again, even if you're going for a bigger swing trade and you want to just hold the stock and your target is the moon, you should still have general bigger picture targets, and that will help you hold things more. And you should get those bigger picture targets from your daily charts usually. So again, if you're looking at, even if it's like Apple, and Apple's on a day 4, day 5 down, and you want to swing Apple, you should be executing, I like to say you execute at daily levels based on intraday action. So if you're buying Apple and it's extended to the like my bread and butter trade is like buying when something's extended on the 5-minute, the 15-minute, the daily, on all time frames. So if you're buying something like that, you shouldn't just have a target of the 5-minute ADMA if it's extended on the 5-minute, the 15, the daily, it's at daily support, like everything's lining up. So that's why you have like multiple targets where, maybe you're buying 25 cents risk and your 5-minute ADMA is 50 cents higher, but then your 15 minutes $1, and then your daily is $5 higher, and you kind of have that like ultimate target where, it might not bounce to there, probably won't bounce to there, but if it does bounce to there, you're getting 10 10 to 1 or more on your risk reward. And then, you know, again, if it's above your stop, you can just kind of like trade around the position. You know, you can average down into your stop loss per se. And then you just got to work on like the numbers with your sizing a little bit too. It definitely takes practice. I've definitely gotten hurt doing that, you know, coming up with a game plan and then realizing like, oh crap, I'm getting like way too big, way too fast. And, you know, this was fine at 1,000 shares and now I'm at 2,500 shares and I'm getting uncomfortable, blah, blah, blah. So you got to kind of work the math out a little bit for yourself depending on your game plan. But yeah. Pat, if you were taking advantage of a smaller time frame, like 2 or 1 minute for execution purposes, good thing Derrick's not here for this question. Do you want to see some kind of confirmation on higher time frame, 5 minute? Can you talk a bit about your execution on lower time frames, please? Yeah, sure. Let me think about it for a minute. I mean, honestly, like the simple way I would explain it is like something that bottoms on a 5 minute chart bottoms on a 1 minute chart before it bottoms on a 2 minute chart before it bottoms on a 5 minute chart. So like based off that fact, I know that 1 minute and 2 minute charts provide like lower space risk, so you can take more share size for less space risk. But on the flip side, which is like the big argument that Derrick puts forth on these smaller time frames that I completely agree with, because I've gotten chopped up doing like over trading small time frames, is you just get shaken out. Like it's too small, it's not enough information. You just get shaken out too easily usually. So let me just think of like how to word this. Pat, if you're taking small, do you see some kind of confirmation on a higher time frame? Well, it's usually not confirmation on. It's actually almost it's almost the opposite of what you're saying, like confirmation on higher time frame. Like when I'm buying, if I'm buying something that's extended to the downside on the 5 minute and the 15 minute and the daily chart, and it looks like it's capitulating, I will also be looking at like the 2 minute chart and even buying like 2 minute extension, because even names like Apple or even like TQQQ like can still be over $1 extended just on its 2 minute chart when things are getting really, really crazy. So if anything, using like the 1 or the 2 minute chart give you the confirmation before the 5 minute chart. Because again, based on like, it's just a fact that something is going to bottom on the 1 minute chart before the 2 minute, before the 5 minute, because of just, time. That's just how it works. So like, again, the plus is it's tighter risk. You can usually take more share size because it's tighter risk. So for example, looking for a bottom in something and buying like an inside 2 minute candle, and, buying that high of the 2 minute candle. And then once that 2 minute, once the next 2 minute candle goes through the prior 2 minute candle's high, like that's your confirmation. And I look to do that because, again, if you can line it up well with reading volume and capitulatory action, and you're extended on the 15 minute chart, you're extended on the 5 minute chart, you're extended on the 2 minute chart. Like if you can execute that way, you're getting your 1-to-1 kick at the same time like people that are watching the 5 minute chart are buying the position, because the 5 minute chart is like finally confirming. You know what I mean? So there's pluses and there's minuses to looking and trading off of those smaller time frames. But like, I guess the key thing I would say again is I'm not trading like based on a 2 minute chart. Like I'm also absolutely looking at the 5 and the 15 and the daily all at the same time. So I hope that kind of makes sense, Robert. Is my sound okay? Or is it just Cap Holmes? Said it was lagging. Okay. I was trying to short VXX today, but got stopped out. Entered at 1330 highs, which I see now that execution was poor. What do you look for as a signal to short VXX intraday? And on daily, also, what is your critic for my execution? So at 1330, do you mean here? Like at like 130? I assume that's what you mean by 1330. Okay. I was trying to got stopped at, which I see now is what do you look for as a signal? So if I'm shorting, basically shorting VIX is a bet that the market is going to either bounce or at least stabilize. Right, like volatility is going to go down. So honestly, usually when I'm shorting VIX would be only an extension, an upside extension. Or I guess like if the market is really in like a clean uptrend, which it's definitely not in right now. I guess maybe you could argue that the SPY is in somewhat of a clean uptrend, although today's daily candle is pretty ugly there again. Like if you're in like a super clean, sticky, grindy uptrend, I suppose you could just short like bear flags on the VIX. But other than that, I would really only look to short it in extreme extension. And again, that's not extension on the 2-minute and the 5-minute. That's extension on the 5-minute, the 15-minute, the daily. So the last time I was really shorting this VIX was at 30 on this day, which the day high at 30.15 is my stop loss. That's where my shares of my VIX short got stopped out. But so that was, when it was at 30 that day, was that here? Oh no, way back. I can't even, my light speed doesn't go back that far. I guess. Was that long? Yeah, I guess. So my light speed doesn't go back that far, but I promise you that the VXX was extended on the 15-minute and the 5-minute chart, and obviously on the daily chart as well when I was looking for that short. So I guess my criteria for your trade here, trying to short it at 1330, would just be you're just kind of like in the middle, which a big help for me over my first like year or two is eliminating these like in the middle trades, because it's just you just don't really have probability on your side. It's kind of just a coin flip. Like you don't like I love trading extension so much because there's an edge to it. Extension always corrects itself. Whether you get a bounce that's big, a bounce that's kind of small, but it's still somewhat of a bounce, or even if it's a time correction, you still chop around. Like you don't just like you chop around, right? You don't just stay there. Even in like time corrections and bear flags and stuff like that. So that's why I like extension, because it's like an edge, right? Like extension always corrects itself. But when you're just in the middle and you don't have any extension and you don't, you're not, like I said before, extended on the 5, the 15, the daily. It's not multiple confirmations. You got a kind of like a downtrend, although you bounced a couple days ago, but a downtrend here on the daily. But then an uptrend intraday here where, you're shorting, but you're above the ADMA. Your moving averages are curled up for the day. You're kind of just like fighting something in the middle. I just don't really see an edge there, which obviously I'm trying to help. I'm not trying to like criticize you or anything like that. Because it was a big help for me to be able to try and eliminate these like in the middle, and I don't just mean the middle of the day, but these like in the middle trades where you don't really have that edge to one side. You're uptrending on the 5-minute and you're flat on the 15 and you're down on the daily. You're kind of just in the middle. So trying to eliminate before this green candle. Yeah, but same thing though. Like you're not. What does it look? What time is this? 1325. Yeah, like well, I mean, for the most part, like I guess you got a bearish candle here, but you're kind of just still in the middle. Like if the VXX is gonna downtrend, or it should, when it does, it typically just respects that 15-minute ADMA, right? Like on this day. So you're getting above your 15-minute. You even got you're kind of just in the middle, like uptrend for the day. Now it's the middle of the day. You're not really downtrending all day. I know it's a daily downtrend, yes, but you're uptrending today. So same thing. You're just kind of in the middle there. So hopefully that makes sense. Just try to eliminate those like kind of in the middle trades, where you only have an edge on the 5-minute and you don't really have an edge on the 15 or the daily. So yeah, it's better to miss a trade than to lose money on a trade. In your opinion, based on all the red candles in Roblox, do you feel it will open lower? It's sitting on resistance, but directly on a huge gap up. Based on all the red candles, I assume you mean the daily red candles. And then I assume you mean sitting on support. It's sitting on support, I assume you mean, but directly on a huge gap up. And you're just asking if it'll open lower. I mean, betting on gaps is kind of just like a coin flip. Especially it seems like in the market these days, like I feel like 10 years ago, not that I was trading, not that I was a professional trader 10 years ago, but I feel like 10 years, like, I feel like a lot of these, like people that have been trading for a while, will close a certain way and then we'll say, oh, we should gap based on, this way, based on this close. And I feel like these days the market, it's almost like if we definitely look like we're going to gap one way, we gap the other way. It's almost like you got to like use reverse psychology these days. So, I don't really know for the gap in Roblox. I mean, you're at support. This 95 is definitely a support level. You tailed below there yesterday and closed above. You tailed below there today and closed above by 39 cents. So it's trying to hold support. It's extended to the downside on the daily for sure. So I don't know. I could see it going either way. If I had to bet, I would say gap up because it closed above 95. It closed above support. So if you really want me to bet, I would say gap up, but I'm not too much of a betting man. I see a question here on YouTube. Is Hood due for a bounce? I like it for a $2 to $3 swing. This thing is so destroyed. So destroyed. Is it due for a bounce? Yes. Is it gonna bounce? I have no idea. And honestly, probably not. I don't know. I mean, Bank of America came out this morning underweight, saying kind of like the perfect storm for trading, for the retail trading is over. It's definitely exhausted to the downside. It's not extended to the downside, but I would say it's getting to be exhausted to the downside. You could argue here you have some positive RSI divergence with, a higher low in the RSI, even though prices are making lower. So you could argue there's some positive divergence there. That's about all I got for you. And the thing too is like if you're looking for, like you're saying you're looking for a $2 to $3 swing, but so what's your out? Is your out today's low, yesterday's low, which is like mid-17s? So if you want to buy some at 18.50 and risk 50 cents to $1 and look for a $2 to $3 swing, that makes sense to me. But otherwise, I wouldn't just buy it here looking, with no stop, looking for a bounce, because you could have done that at $25. You could have done that at $30. And now you're at 18. So besides this like a little bit of positive RSI divergence, just make sure you have a game plan for that, because Otherwise, this is one of those names where you buy it and it just keeps grinding lower, and you don't get any bounces because there's no buyers. And yeah, so I don't hate your idea, but definitely just have a game plan for what you want to risk it to. Don't risk $5 to make $2. Doesn't make any sense. Do you find any use to look at 60-minute bars? I do. I look at the hourly chart. I look at 30-minute candles too. I like 30-minute candles. I used to look at the hourly more. I look at the 4-hour too, by the way. I used to look at the hourly more. The hourly serves as great confirmation, but I've never really traded off the hourly because it's just usually the bars are way too much risk for me to take like any real size, or it's just I'm just not comfortable with it because usually if you get confirmation on the hourly, I'm sure there's a setup in there on the 15 or the 5-minute where you could execute better and get better size. But yeah, the hourly, I like the hourly for sure. Usually like hourly, hammers or hourly bullish engulfing bars are great confirmation signals. And I like the 30-minute too, because the 30-minute is usually a little bit tighter than the hour, so maybe you can try to trade off the 30-minute. But yeah, I do look at 60 and 30. But usually if the 60 and the 30 give a signal, you'll be able to find something on the 15-minute chart that gives you a signal as well. And again, same thing as I was explaining with the time frames earlier, like something's gonna bottom or top on the 15 before the 30, before the hourly. So I found that the majority of my losing trades came from trading inside day. Yeah, I could see that for sure. Just like a choppy day. I could see that. Worst scenario, gap pat. Yeah, in this market for sure. It definitely seems like that, which, I mean, that's just what the market does. It tries to bring max pain to as many participants as possible. And so that's why what we try to do, and, sentiment helps, looking at sentiment and stuff like that, is kind of like predict what would cause that max pain, what would be that max pain, and like go with that. Which oftentimes in this market too, it seems max pain is higher, right? Like people are short because they think this market is crazy and it has to go down at this point, or people are underexposed and they're forced to buy. Like we've seen a lot of scenarios where max pain is higher. Max pain definitely just doesn't have to be straight down. If you're underexposed and the market just keeps going higher and higher, that can definitely be max pain for some people. Looks like that's it. Any other questions or anything? Otherwise, I'll definitely wrap it up for today. And we'll see how we gap. We'll see how we follow through for tomorrow. But things are looking ugly out there for sure. We'll see if this IWM can hold 210, but things are not looking too great. So quad witching, options expiration tomorrow. Tomorrow is probably going to be tricky and crazy again. So we'll see.